It will come as no surprise to most of you that 2020 has been one heck of a roller coaster of a year. Now that that year is over and a new year is finally upon us, it is time to go over some plans of what you are going to do in 2021 to build your wealth. Buying your first real estate investment property with little to no money down is possibly one of the best ways to build long-term wealth. Many of my friends ask me how they should purchase their first property. They're intimidated and they think it's going to be way too difficult and something they could just never do. In today's video, I will show you the step-by-step process of exactly what you need to do and demystify the process. There are many different investment strategies for you on your first rental property. But to keep things simple today, I'm going to cover how you can purchase a single family home and how you can rent it out. Should I also make a video on multifamily 2 to 4 units or more? If so, comment down below and let me know what you guys are interested in. Hello and welcome to Stephen Carlson Show. I'm Stephen Carlson. I'm a tech entrepreneur, real estate investor, author, YouTuber, volunteer paramedic, and today Bonnie and Clyde are not in the studio. They are downstairs pouting because they received a bath, and well, let's just say they're not exactly too happy with me. I want to be upfront with you. Investing in real estate requires work, and there is risk. The key is to do your research and reduce this risk so you can invest wisely. Of course, even when you do everything right, sometimes crap just happens. Currently, many thousands of landlords scattered across the entire country, they're in dire financial straits, unable to make their monthly mortgage commitments. Sadly, many of them will probably lose their properties due to the economic shutdown caused by COVID. However, I want to make it abundantly clear, now is also the perfect opportunity to get into real estate and begin building your wealth. Put aside the emotional reactions and face the hard facts. Wealth is built during depressions and recessions. I know it's not popular to say, but the vast majority of wealthy people in America, excluding the tech entrepreneurs, but the majority of them that have built lasting wealth, they purchased properties during economic downturns. Okay, you've heard me rambling on enough. I think you get the idea. In fact, you clicked on the video about purchasing your first real estate property, so I'm pretty sure you're sold on the idea of becoming a real estate investor. Today's video will go step-by-step summary of the things that you need to do to purchase your first property. In the coming weeks, I will upload detailed videos covering each one of these subsections in more detail. Step 1. Becoming pre-approved, or more specifically pre-underwritten through a lender. This step is often overlooked by many, but it is arguably one of the most important steps to purchasing an investment property. I covered some of these details in a previous video on what you need to know before refinancing a property, and many of them apply exactly to purchasing a property as well. I invite you to check out that video, the link will be down in the description. First, you should contact multiple lenders in your area. You can even contact a few of the large nationwide lenders like Rocket Mortgage, etc. The key is to ask these lenders precisely what do they need from you to become pre-underwritten. And I will repeat that phrase, pre-underwritten. This is different than pre-approved or pre-qualified. Allow me to explain. Pre-qualified, which sometimes is called pre-approved, is basically the bank representative taking a quick glance at your tax returns and credit report and saying, yeah, everything looks good. Where in this case, they've not really actually taken a detailed look at your finances. They just took a quick glance. The sad thing is, many times the loan broker will say that they have you approved because they figure that even if their bank turns you down, they can shop your loan around to other subprime lenders and get you approved for a ridiculously high interest rate. Seeking a pre-underwritten letter means that your tax and credit information has gone to the actual person who approves the final loan. They have reviewed your information in detail and they can provide an approximate 99% guarantee that you will be approved for your loan. They will also tell you an estimate of what your payment and interest rate will be. Of course, that does fluctuate daily and depends on the purchase price of the house. And it goes without saying that things can always change, and even if you do receive a pre-underwritten letter, there is no 100% guarantee you're going to close. But in reality, you most likely will. Keep in mind, the underwriter that just approved you, they're the ones that make the final decision in approving your loan. So if they've already reviewed your information and they are satisfied with you, chances are you're most likely going to be approved for the loan. Also, while speaking with the lender, this is when you ask them questions about their rates. Once again, I covered this in great detail in a previous video on refinancing your mortgage. After this video, check that video out. The pre-underwritten letter is the gold standard and gives you a significant leg up in negotiations when you submit your offer to purchase a property. Okay, now let's get over to step 2. Time to actually find a property. Now that you have your pre-underwritten letter for a loan, it's time to go searching for a property. But remember, don't skip step 1. There's no need for you to go looking at properties if you're not going to be approved. There are many different ways to find properties. You can search online with websites like Zillow or Redfin, or you can contact a local real estate agent. To keep things simple, at least in the beginning, it is best for you to find a property on the open market and have an experienced real estate agent guide you through the process. Yes, this will usually cost you a little bit of money, but remember to think of this on a long-term time horizon of 10, 15, or even 30 years. The small amount of money you spend today on a realtor is going to be nothing compared to how much it could cost you by making a simple mistake. Whichever route you go, look at properties within neighborhoods that you know and understand. Almost never is it advisable for you to purchase real estate outside of your local area. With your realtor's assistance, or you can do this on your own, do some research for the local rents so you can get an estimate of what type of rent you can get for a specific house. A simple way is just drive around the town and look for signs for properties for rent, or check Craigslist or Zillow Rents. Then call these places up and ask them what their rent is. Don't tell them you're an investor, just pretend that you're a potential tenant. Once you know the going rental rates in your area, this will help you determine a specific house that will be a good fit. The main goal here is to make sure that you have enough rent collected each month to pay your monthly loan, your insurance, your taxes, your maintenance, and a little bit extra cash flow per month. Now, when you start out, do not get focused on how much cash flow profits you're going to make per month. If the property breaks even, that's still a good deal in many cases. Remember, this is a long-term strategy to build wealth. It is not a get-rich-quick scheme. Step number 3, submit an offer. Working with your agent, submit an offer to purchase the property. Having your pre-underwritten letter signed by your bank will help in your negotiations. Sometimes you can even get away with submitting a lower offer on the property and have the seller accept it because they are confident you will be able to get closing on the property. A good realtor will also be able to find information about the seller from the seller's real estate agent. Questions that are really good to know the answers to is, why are they selling the property? Why are they not renting it out themselves? And what happens if they're unable to sell it, etc. If your offer is accepted, now it's time to move on to step number 4. If they reject your offer and there's no wiggle room in negotiations with the seller, it's time to find another property. The worst thing you could do is become emotionally involved and fall in love with a specific property. Remember, these are investments. It's purely about the numbers. If one deal is not meant to be, move on. There are thousands of other properties available. Step number 4, enter escrow. This is definitely something that your real estate agent will help guide you through. So I'm going to kind of gloss over many of the details here. Following your realtor's advice, it's probably your best bet in the beginning here is to basically do what they say. One suggestion I will add is to keep everybody on the same page. Once an offer is accepted, construct a polite, welcoming email to your real estate agent, your loan broker, insurance representative, and the title company. In the subject of the email, include your property address and your name. This way it makes it easier for everyone to know what this email is referencing. Begin the email with a very concise, short, brief synopsis of the situation, with simple one-line bullets. Do not get long-winded here, just simple and to the point. Include the property's address, the purchase price, estimated closing date, contract dates, and share the contact information for everyone in the team. Basically, everybody that's receiving this email, they should have all their contact information in this email. Step number 5, negotiate repairs. Almost every single property will need some sort of repairs. Don't be alarmed. This is normal. When you get back an inspection report, it will nitpick, and I mean nitpick, on every single thing in the property. That's good. Remember, the inspector works for you. It's their job to find as many problems as possible. Now you can go back to the seller and negotiate some of these repair items. If the seller is desperate to sell the property, in many cases, you have a very strong negotiating stance versus a person that really doesn't care if they sell the property now or not. With this information in mind, you can negotiate your repairs. For example, on a property I closed on last month, it needed about $15,000 worth of repairs. The seller agreed to pay for all of it and also agreed to use a contractor of my choosing. And he was also agreeing to get all of these repairs completed before closing. This way, at the closing table when I received the keys, the seller paid the contractor for the work and everything was fixed. But do not be surprised if the seller is hesitant or refuses to provide all the repairs. It just depends on the situation. Obviously, the goal is to get the seller to pay as many of these repairs and upgrades as possible, so that you don't have to pay for them yourself. Now that you are a happy owner of your very first investment property, congratulations! Now, I know I glossed over a lot of details in here. Providing complete information would have made this video easily 5 or more hours long, and this is already going to be a very long video. So I thank you very much for watching all the way to this point. What questions do you have? Is there something specific that I didn't cover that you are concerned about? Leave a comment down below and let me know. Thank you very much for watching. Please make sure you click like and subscribe. Doing so really helps the YouTube algorithm. I appreciate it, and I'll see you on the next video.